Investing in crypto for beginners. Welcome to Be a Baby Billionaire. Cryptocurrency has emerged as a transformative force in modern finance, representing a virtual form of currency that operates solely in the digital realm. Unlike traditional currencies, cryptocurrencies are decentralized and not subject to regulation by any central authority, relying instead on blockchain technology to validate and record transactions securely and transparently. With its decentralized nature and reliance on blockchain, cryptocurrency transactions are executed efficiently without the need for intermediaries like banks. While cryptocurrencies offer the potential for seamless transactions and innovative solutions, they also come with inherent risks due to their highly volatile nature and susceptibility to security breaches. Investors must carefully consider factors such as regulatory environment, security measures, investment strategy, and diversification before delving into this dynamic market. As the cryptocurrency landscape continues to evolve, understanding its fundamentals and navigating its complexities is essential for individuals seeking to capitalize on the opportunities presented by this transformative asset class. What is cryptocurrency? Cryptocurrency is a virtual form of currency that operates similarly to traditional cash but exists solely in digital form. Unlike conventional currencies, cryptocurrencies are decentralized, meaning they are not controlled or regulated by any central authority like a government or central bank. Instead, they rely on blockchain technology, a secure and transparent ledger system, to validate and record transactions. Blockchain technology ensures the security, accuracy, and transparency of cryptocurrency transactions by creating an encrypted record of each transaction that is distributed across a network of computers. This decentralization eliminates the need for intermediaries like banks, making transactions faster and more efficient. Cryptocurrencies are created through a process called mining and are stored in digital wallets. Despite their virtual nature, cryptocurrencies can be used for purchasing goods and services as well as for investment purposes. However, it's essential to note that cryptocurrencies are highly volatile assets, with prices experiencing significant fluctuations over short periods. Therefore, investing in cryptocurrency carries inherent risks and requires careful consideration and research. Types of cryptocurrencies. The cryptocurrency market is vast and diverse, with thousands of different cryptocurrencies available for trading. Bitcoin, the first and most well-known cryptocurrency, paved the way for the emergence of numerous alternative cryptocurrencies, collectively known as altcoins. These altcoins serve various purposes and cater to different niches within the cryptocurrency ecosystem. There are many top cryptocurrencies by market capitalization that have soared to great heights. However, the cryptocurrency landscape is continually evolving, with new projects and tokens being introduced regularly. Investors should exercise caution when selecting cryptocurrencies to invest in, as the market is still relatively young, and many projects may lack proven track records. It's essential to conduct thorough research and due diligence to assess the potential risks and rewards associated with each cryptocurrency before making any investment decisions. Market trends in crypto investing. Market trends in crypto investing are characterized by a dynamic interplay of factors that shape the direction and sentiment of the cryptocurrency market. These trends can encompass a wide range of dynamics, including price movements, trading volumes, regulatory developments, technological advancements, and investor sentiment. Historically, the cryptocurrency market has exhibited periods of rapid growth and volatility, driven by factors such as adoption by institutional investors, regulatory announcements, macroeconomic events, and advancements in blockchain technology. Additionally, market sentiment plays a significant role in shaping trends, with factors such as fear of missing out, FOMO, or fear influencing investor behavior and market dynamics. As the cryptocurrency market continues to mature and evolve, staying attuned to emerging trends and developments is essential for investors seeking to navigate this fast-paced and dynamic landscape effectively. Whether identifying opportunities for growth or managing risks during market downturns, Understanding market trends is crucial for making informed investment decisions in the ever-changing world of crypto investing. To consider before investing in cryptocurrency? Before diving into the world of cryptocurrency investing, it's crucial to consider several factors to ensure that it aligns with your financial goals and risk tolerance. Cryptocurrency markets are known for their extreme volatility, making them unsuitable for conservative investors. Here are some key considerations. Consideration 1. Volatility. Cryptocurrencies are notorious for their price volatility, with values experiencing rapid fluctuations over short periods. This volatility can lead to substantial gains or losses in a short amount of time, making it essential to be prepared for the inherent risks involved. Consideration 2. Regulatory environment. The regulatory landscape surrounding cryptocurrencies is still evolving, with different countries implementing varying levels of regulation. Investors should stay informed about regulatory developments in their jurisdictions to understand the legal implications of investing in cryptocurrencies. Consideration 3. Security. Cryptocurrency investments come with unique security risks, including hacking, phishing scams, and the potential loss of private keys. It's crucial to adopt robust security measures such as using reputable exchanges and digital wallet providers, implementing strong passwords and two-factor authentication, and being vigilant against phishing attempts. Consideration 4. Investment strategy. Consider your investment goals, time horizon, and risk tolerance before investing in cryptocurrency. Determine whether you're looking for short-term gains through trading or long-term appreciation by holding on to assets. Develop a well-defined investment strategy and stick to it to avoid emotional decision-making based on market fluctuations. Consideration 5. Diversification. As with any investment portfolio, diversification is key to managing risk. Avoid putting all your eggs in one basket by diversifying your cryptocurrency holdings across different assets and asset classes. This strategy can help mitigate the impact of volatility and reduce overall portfolio risk. By carefully considering these factors and conducting thorough research, investors can make informed decisions about whether cryptocurrency investing aligns with their financial objectives and risk tolerance. It's essential to approach cryptocurrency investing with caution and be prepared for the potential ups and downs that come with this emerging asset class. Pros of investing in cryptocurrency. Investing in cryptocurrency offers several potential advantages that attract investors seeking exposure to this emerging asset class. Understanding these pros can help individuals make informed decisions about whether to include cryptocurrency in their investment portfolios. Pros 1. Diversification. Cryptocurrencies provide an opportunity for diversification beyond traditional asset classes like stocks and bonds. Because cryptocurrency prices are often uncorrelated with those of traditional investments, holding cryptocurrency can help spread risk and potentially enhance overall portfolio returns. Pros 2. Potential for high returns. Cryptocurrencies have historically demonstrated the potential for significant returns over relatively short periods. Early adopters of Bitcoin, for example, have seen substantial appreciation in the value of their investments. While past performance is not indicative of future results, the high volatility of cryptocurrencies can present opportunities for savvy investors to capitalize on price fluctuations. Pros 3. Decentralization and transparency. Cryptocurrencies operate on decentralized blockchain networks, which offer transparency and security compared to traditional financial systems. Blockchain technology ensures that transactions are recorded securely and cannot be altered retroactively, providing greater trust and transparency in financial transactions. Pros 4. Accessibility. Cryptocurrency investing has become increasingly accessible to retail investors, thanks to the proliferation of cryptocurrency exchanges and investment platforms. Investors can easily buy, sell, and hold cryptocurrencies through user-friendly interfaces, often with low barriers to entry. Pros 5. Innovative potential. Cryptocurrencies and blockchain technology have the potential to revolutionize various industries, including finance, supply chain management, and healthcare. Investing in cryptocurrency allows investors to participate in the growth and development of these innovative technologies. While investing in cryptocurrency offers several potential advantages, it's essential to recognize that these benefits come with risks. Investors should carefully consider their risk tolerance and investment objectives before allocating capital to cryptocurrencies. Additionally, thorough research and due diligence are crucial to navigating the complex and rapidly evolving cryptocurrency market. Cons to investing in cryptocurrency. Despite the potential advantages, investing in cryptocurrency also entails several significant risks and drawbacks that investors should carefully consider before committing capital to this asset class. Cons 1. High volatility. Cryptocurrency markets are notoriously volatile, with prices experiencing extreme fluctuations over short periods. While this volatility can present opportunities for high returns, it also increases the risk of substantial losses. Investors must be prepared for the inherent unpredictability of cryptocurrency prices and the emotional toll that market swings can take. Cons 2. Regulatory uncertainty. The regulatory environment surrounding cryptocurrencies is still evolving, with governments worldwide grappling with how to regulate this emerging asset class. Regulatory changes or crackdowns could have a significant impact on cryptocurrency markets, potentially affecting investor sentiment and market liquidity. Investors should stay informed about regulatory developments and be prepared to adapt their investment strategies accordingly. Cons 3. Security risks. Cryptocurrency investments are vulnerable to various security risks, including hacking, phishing scams, and the potential loss of private keys. While blockchain technology provides a secure and transparent record of transactions, individual investors must take precautions to safeguard their assets, such as using reputable exchanges and digital wallet providers and implementing robust security measures like two-factor authentication. Cons 4. Lack of legal protection. Unlike traditional investments like stocks and bonds, cryptocurrencies are not subject to the same legal protections and regulations. Transactions conducted with cryptocurrencies may not come with the same level of legal recourse in the event of fraud, theft, or disputes. Investors should be aware of the potential lack of legal recourse and take steps to mitigate associated risks. Cons 5. Market manipulation. Cryptocurrency markets are relatively young and less regulated compared to traditional financial markets, making them susceptible to manipulation and fraud. Pump and dump schemes, insider trading, and market manipulation tactics are not uncommon in the cryptocurrency space, posing risks to investors. Conducting thorough research and due diligence is essential to identify potential scams and fraudulent activities. While investing in cryptocurrency offers the potential for high returns and innovation, investors must weigh these potential benefits against the significant risks and drawbacks. Conclusion. As we conclude this exploration of cryptocurrency investing, it's evident that this dynamic asset class offers both opportunities and challenges for investors. From its decentralized nature and potential for innovation, to its volatility and security risks, cryptocurrency presents a compelling yet complex landscape for those seeking to participate in the digital economy. As with any investment, thorough research, risk management, and a clear understanding of one's financial objectives are crucial for navigating the cryptocurrency market successfully. By embracing diligence, prudence, and a forward-thinking mindset, investors can harness the transformative potential of cryptocurrency while mitigating its inherent risks. Time for the soft question. Do you invest in cryptocurrencies? If so, what do you and what do you not like about them? Please share your experiences in the comment section below. This will help everyone learn from each other and grow together. Subscribe with us and learn. If you find the information in this video valuable, please subscribe and share it with family and friends. Your support will help us create many more high-quality videos like this. Please support us. Please hit the like button and the notification bell to be notified. Click on these 2 videos shown here to explore even more. The contents of this video are for educational and informational purposes only. Thank you for watching.